Good evening to everyone here, and good afternoon, good evening to people joining from other time zones. Thank you for joining us today for HCLTech's FY25 and the fourth quarter earnings announcement. FY25, we demonstrated resilience and growth supported by our diverse and all-weather portfolio despite the uncertainty in the global economy. I'm pleased to share that we've delivered superior growth with good control over steady profitability during challenging times. Our razor-sharp focus on clients during this period of uncertainty helped us achieve results that matched our guidance. I sincerely thank all our HCL techies for another resilient and an industry-leading performance. All the revenue numbers I'll be sharing today are in constant currency. In FY25, we clocked a consolidated revenue of $13.84 billion, an increase of 4.7%, attributed to both our services business and the software business. Our operating margin was 18.3%, a 7 basis points increase over FY24. FY25 marks the third consecutive year of our services business outpacing our similar-sized peers. In FY25, our services business achieved a growth of 4.8%. IT and business services reported an increase of 4.6%. Engineering and R&D recorded a growth of 5.5%. HCL Software also demonstrated strong performance with a growth of 3.5%. HCL Software's annual recurring revenue now stands at $1.03 billion. This year also marks a growth acceleration in HCL Software compared to FY24. Now, getting to our fourth quarter performance, our revenues declined 0.8% sequentially, attributed to the seasonality in our software business. Software business grew 2.9%. Overall, we grew 2.9% on a year-on-year basis. Our operating margin for the quarter came in at 17.9%. Our services business grew 0.7% sequentially and 2.7% year-on-year. In terms of geographies, during the financial year, all the three geographies grew. Americas, the largest IT services market, grew 5.3%. Rest of the world followed with a 4.7% increase, and Europe grew 3.5%. Shiv will comment a little more on our geographic reporting going forward a little later. This year, our leading vertical was telecom, media, publishing, and entertainment, which exhibited a very robust growth of 43.4% in FY25, followed by retail CPG, achieved a 10.7% increase, apart from technology and services, which grew 6.7%. Further, to capitalize on the large public sector spend, we recently established HCLTech Public Sector Solutions, a subsidiary dedicated to serving state and local governments and educational organizations, as well as federal, civilian, and defense agencies in the US. I'm glad to share that even during this period of relatively slow growth, we added 6 clients in our $50 million category and 1 in the $20 million category on a year-on-year basis. Coming to bookings, we had a very strong quarter. In fact, the second highest after the September 23 quarter, which was on back of a mega deal, which all of you know. This quarter, we brought in $3 billion in net new booking. At the fiscal year level, the total new booking stands at $9.4 billion. This strong booking was well balanced across service lines, geographies, and verticals. Our engineering and R&D services business led the charter with a record high 75% growth in bookings in FY25. This demonstrates great execution of our integrated go-to-market organization. As an example, a US-based global high-tech company selected us for a mega engineering services deal to serve the rapidly growing AI-powered silicon and software-defined vehicle segments. The client will leverage our industry-leading capabilities in the semiconductor space to bringing cutting-edge solutions to the market. With respect to our pipeline, we are very pleased with the health of our pipeline. It continues to be near all-time high. even as we experience healthy conversions in Q4. The pipeline is supported by multiple deals across IT and business services, engineering services, and HCL software business. Notably, AI and GenAI are now integral components of almost every deal. Both Americas and Europe have shown considerable pipeline growth during the quarter. We've made significant strides in AI and GenAI, impacting both clients and our internal operations and processes. Our 4 flagship offerings, AI Force, AI Foundry, AI Labs, and AI Engineering, have seen substantial adoption and scaling in FY25. Our AI Labs continue to enable clients in their AI journey. They've delivered 500 AI GenAI engagements for 400 clients. We're also driving industry-focused and horizontal repeatable solutions and investing significantly in driving agentic capabilities across our offerings, AI Force, AI Foundry, and AI Engineering. HCL Software is also adopting AI GenAI into various aspects of its business. And most importantly, we had several instances where we are winning higher wallet share with existing customers as we bake in GenAI-induced productivity gains in our bids. We were also recognized as the world's fastest growing IT services brand in 2025 by Brand Finance, increasing our brand value by 17% year on year to $8.9 billion. We've been recognized by Ethisphere as one of the world's most ethical companies in 2025, marking the second year in a row we've earned this accolade. Looking ahead, we believe enterprises will accelerate AI adoption to enhance efficiencies and drive innovation. Generative AI has 2 facets at the time of contract renewals. We expect both pricing pressures as well as new revenue opportunities. We believe discretionary spending will continue to be subdued in this environment. Geopolitical factors like tariff and deglobalization are expected to impact IT services. In the coming months, it will be an important topic to observe and monitor the ongoing developments. As I look beyond the uncertain short term, I strongly believe there will be strong growth opportunities emerging out of the market uncertainties. And finally, as mentioned in our investor release, our revenue growth guidance for the full year FY26 is 2 to 5% YOY in constant currency. EBIT margin guidance continues to be at 18 to 19%. With that, I'll hand over to Shiv to provide more details on our numbers. Thank you, everyone, and over to you, Shiv.